All right. Hello, everyone. Pleasure to be here. I'm not making the presentation of our fund. I think that there are too many very interesting funds, VC and CVC funds here, to make a proper introduction about themselves and talking about them. So what I'm going to focus is on a recent survey that we've done across 80 funds, including venture capitalists and corporate venture capitalists, to know a little bit what are they expecting of their investments in 2023. So we wanted to analyze a little bit more about how these market conditions that are coming here and everything that everyone is talking about around like how they're decreasing the investments or they're moving away from very early stage or they're thinking that valuations will keep going down. We wanted to survey them and wanted to see what they're expecting and just presenting these results for the very first time. We actually finished the survey just 10 days ago, so this is very, very updated. So 30 seconds about just our fund, global fund focused in the construction industry across 3 verticals: sustainability, productivity, and urbanization solutions. Early stage from pre-seed to Series A. We have 3 offices, Silicon Valley, Madrid, where I'm based, and Singapore, so pretty global fund. We've made so far about 6 investments, and all of our LPs are corporates in the industry, so we really work on putting the startups together with these corporates. So having said that, going to the first slide here, just thinking about like what does VCs and corporate venture capital think about how their investment landscape is going to look like in the next year. On purpose, we didn't give them the option to say we're going to make the same investments. We wanted to kind of trigger them whether, do you think that it will be a little bit more, or do you think that it's going to be a little bit less than 2022? And it's a little bit surprising here that there's a high degree of confidence, like 80% of the respondents almost said that they're going to increase their capital deployment, and only 20% are thinking about either decreasing or won't be doing any investments in 2023. We do see a little bit of a difference here between VCs and corporate VCs. I don't know if you can see these slides, but corporate VCs, they do see that the market uncertainties and maybe how inflation or the increase in energy costs is actually making an effect on their margins or on their sales. So they're a little bit more skeptical about whether they will be deploying a little bit more or less capital in 2023. And also just an observation, all of these funds, they either invest only in construction industry or they do have one vertical for the construction industry. So these are not generalist funds, but actually funds that at least have made one investment in contact. So diving a little bit deeper on these expenditures of capital for next year, we asked them a little bit about what would be their concerns for deploying this capital and whether they would change or not their investment focus. On this second point here, our hypothesis, and based on several discussions that we were having with some funds, is that yes, they will still be deploying capital. However, they will be a little bit more restricted on where they're going to invest those capitals. So for instance, there was an overflow of capital coming into the US market that was flowing into other regions like Latin America or maybe also Europe, because there were so many deals, so much competition in the US, that then they were flying to other regions. Now we see that the trend is that 20% of these funds will be focusing and concentrating much more on their core themes. So that might not be the best signal for companies or startups that are outside the main regions of investments or that are outside the main industries, right? So maybe a lot of funds will keep focusing on their investment on insurtech, fintech, and the industries that they really know, and maybe contact will be a little bit more damaged under these circumstances. And secondly, about what are the main concerns of deploying capital, I think there's no big surprise here. Most of them are very concerned about how the markets are going to react, how the labor shortages, the inflation, the rising energy costs, the sustainability pressure, how is that going to be putting pressure on their own businesses or on the startups or on the valuation, whether there will be a continuous correction of the valuation. So should I invest today or should I wait for 6 months, 12 months for even the following round of the startup, because I have the expectations that those valuations will keep coming down, so I have an opportunity to invest on a later on stage at the same valuation of today, and therefore have less risk on my investments, right? And of course, funds availability, you can transfer that to both VCs. Not as much maybe because according to data, VCs are sitting on the highest amount of capital to be invested at all times, but maybe on corporates as well, because what's going to be the available budget that they have for investing in these not conventional businesses that they have across their units. And talking about this on the market uncertainty and the valuation correction, then our next question was, what are they expecting on valuations? And sorry to all the entrepreneurs here, but this is very, very pessimistic. So if you're trying to raise in 2023, the expectations from pretty much everyone, like 80%, is that your valuation will keep decreasing or significantly decrease. This is more than 30%. 20% of the companies, of the funds thought that, and 30% they thought that they would somehow decrease these valuations. So this means from 0 to 30%. We still have some of the people that are about 20% that are think that they will remain more or less the same, and some 6 respondents, almost 8%, that they think that somehow increase. So again, we see that there's a little bit more tailwinds under the decreasing of valuation. So just to expect, what do you think? Whether you think that you're going to make a big investment round at a high valuation compared with your last round, probably might not be the case unless your metrics really show that this traction is really paying off and it's really growing your company. Last 2 slides, very quick. We wanted to know exactly what will be then, under these circumstances, the technologies where they believe that they will be increasing their investments in 2023. There's a clear bias here about sustainability. And even in corporate VCs, that number increased up to 80%. So 80% chose sustainability as one of the top 3 investments, or one of the areas in which they wanted to increase investment. So green construction, top of mind. Maybe if you're developing a startup, maybe this is a time to transition or to a little bit put your value proposition around sustainability, around how you're putting your resources more efficient, how you're helping to decrease the waste, to decrease the resources that are being utilized on the job site. Some other areas as supply chain, new materials, maybe new materials also a surprise for us, and robotics, that we're seeing that more and more it's being deployed on the job site at an easier and faster pace. The last one here, so as, again, to entrepreneurs, to be mindful of what are the metrics that VCs will be looking for, top 3 on this case. I think that the first 3 are not any surprise, or the first 4, of course, the team, always, particularly on early stages. But one of the things that really caught our surprise was the burn rate. 30% of the answers were like one of the top 3 metrics that they are looking for right now is going to be the burn rate. We want to see a little bit longer runways. We want to see that you still have money to get to 2024, maybe after this cycle of the market, to start really going up, and then you will be able to raise a little bit more money. In some cases, I've heard a lot of VCs that they prefer a ratio of the burn rate lower, about 2.1 over sales, rather than having a growth in the sales of 4 times or 5 times. So we expect a little bit less growth in sales, but being conscious about how money you're expending to get to that. That's the presentation. This is just the data of who answered this, what are the type of investors, the stages that they invest, and the regions that they invest. But this is just segmentation data. Thank you very much.